Welcome to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. I'm going to start by saying I think I've been doing this for 7 or 8 years. This is going to be my last one. I just can't produce them anymore. Technology has gone a long way, too far for a 77-year-old man. I'm not Chuck. Okay, we're going to look at FSLR, or First Solar Inc. FSLR is a leading global provider of comprehensive PV solar energy solutions. Here's the barchart.com technical opinion rating for FSLR. The bar chart rating is a 48% sell with the weakest short-term outlook on maintaining the current direction. The market is approaching oversold territory. Be watchful of a trend reversal. This is all information from Friday. I feel comfortable using Friday's numbers and Friday's info because I sent the trades out last night, even though we didn't have the workshop produced. Anyhow, according to Prime Trade Select rules, I don't know. I'm lost. Welcome to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. Before going any further, I want to say that technology has gotten too far away from this old man. I'm not Chuck. I've been doing it for 7 years, I think, or maybe 8. This will be my last one. It's been a pleasure. Thank you for listening. Good luck trading. Okay, moving on. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to look at FSLR, or First Solar Inc. FSLR is a leading global provider of comprehensive PV energy solutions. Here's the barchart.com technical opinion rating for FSLR. The bar chart rating is a 48% sell with the weakest short-term outlook on maintaining the current direction. The market is approaching oversold territory. Be watchful of a trend reversal. I think I have that wrong. Oh no, that's right. This is as of Friday. According to Prime Trade Select rules, a stock is in a bear trend on a monthly basis if the stock price is below the 10-period or 10-month simple moving average. The monthly chart shows that FSLR is below the moving average line, so the monthly trend in FSLR is down. As you can see, it has been at least all year. Now we're going to look at the daily chart. The stock is in a bear trend on a daily basis if the 50-period or 50-day exponential moving average is below the 100-day exponential moving average. The blue line is the 50-day EMA line, and the green line is the 100-day EMA line. The blue line is below the green line, so the daily trend in FSLR is down. Hey, but I'm fine now. I'll call you back.
Oh, you are?
Yeah, thank you. Okay, moving on. Sorry about the pause. Next, we're going to look at a daily chart that displays the Keltner channel. As a rule, we don't want to buy calls if the stock price is below, buy puts if the stock price is below the lower Keltner channel line. Anywhere inside the Keltner channel or even above the Keltner channel is fine. FSLR is above the lower Keltner channel line, so FSLR is inside the sell zone. Since the trend is down, we want to buy a put. FSLR has plenty of option chains to choose from. We're going to use the July 18 chain. Right now, the July 18 options have 25 days to expiration. That was as of Friday. Here's part of the FSLR option chain for July 18. FSLR closed at 145 on Friday. That means any puts on the list from 190 to 146 are in the money. We're going to look at buying the 145 strike put, which is the closest strike to the current stock price with good open interest. The bid-ask spread for the 145 put is 10.25 to 11.30. We tried to enter near the midpoint, so it was 10.80 as the buy price. Our put option purchase calculator shows that if FSLR is flat at 145 even, when the options expire, the 145 put will lose 100% of its value. Ouch! That kind of loss can wipe out a trading account in a hurry. We developed what we call the 1% rule to help us avoid this kind of risk. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means a stock only has to move down 1% for the put option we purchase to break even and start profiting. Now let's take a look at buying the 160 strike put to see if it qualifies for the 1% rule. Here's the put option calculator picture for the 160 put. According to the 1% rule, we want the put to at least break even if the stock price is down 1%. The calculator picture shows that if the FSLR stock price is down 1%, the 160 put will lose 17.8% of its value. We want that to be break even or better, so the 160 put does not meet our requirements. Let's see if the 180 put will work. The bid-ask spread for the 180 put is 35.95 to 37.15. Okay, I'm fudging a little bit because I wrote down the wrong numbers on Friday. Anyhow, we're going to use 35.40 as the buy price. The 180 put works. If the FSLR stock price is down 1%, the 180 put will make a 0.1% or $5 profit. That's better than break even, so the 180 put is the one we buy. The put option purchase calculator also shows that if the FSLR stock price decreases by 2.5%, the 180 put will make a 6.1% or $285 profit. If the FSLR stock price is down 5%, the 180 put will make a 16.1% or, whoops, I got the numbers wrong. Oh my gosh. Oh no, I think I got it right. We're going to keep on trucking, sorry. The 2.5% number is wrong. But it looks like the 5% number is right. Losing 16.1% or 200, making 16.1% or $585. And let's see, the 7.5% numbers are right, and the 10 and minus 10 and minus 12% numbers are also correct. Sorry about mistakes. And notice that if the FSLR stock price does not make the expected move down and remains flat at expiration, the 180 put would only lose minus 3% or minus $100 compared to the minus 100% or minus $1,080 loss for the 145 strike put that we looked at earlier. Now we want to review a put option debit spread, aka a vertical put spread. For this spread, we want to buy to open the FSLR July 18 170 strike put and sell to open the July 18 160 strike put. We're going to base our entry prices on the midpoint between the bid and ask prices. That means we'll buy the 160 put for $27.70 and sell the 170 put for $2,000 even. $27.70 minus $2,000 equals $770. So the entry price or debit cost for the spread is $770. The put option spread analysis calculator picture shows that the spread will make a 29.9% or $230 profit if the FSLR stock price increases by 7.5%, remains flat, or decreases in price when the options expire. Creating the debit spread will allow us to collect a $2,000 cash credit to a brokerage account for the sale of the 160 put. As we said on the previous slide, this reduces the cost of entering the spread to $770. Here's a note regarding earnings reports. The next FSLR earnings report is scheduled for July 29. Oh, I have this wrong too, but we're going to use it anyway. I'm not doing this again. Let's review the trades one more time. First trade was a put purchase. It said to buy to open the July 18 180 put for $36.40. As I said, I fudged the numbers. We also reviewed the spread. The spread said to buy to open the FSLR July 18 170 strike put and sell to open the FSLR July 18 160 strike put at a debit of $770. That's it for this week's Optioneering workshop. Hey, it's been a pleasure doing this for all these years. Hey, someone will look forward to talking to you again next week, and I wish you the best in your trade and your lives.